Do not pay yourself via payroll if you have an LLC. Instead, do this. You set up a owner's draw, which is basically a transfer from your business account to your personal account for the money that you want to pay yourself. Because the money that you pay yourself from your business should not be tax deductible. When you pay yourself via payroll as an LLC owner, you're putting a tax deductible expense and a legal tax deductible expense on your profit and loss statement.
He completely misses the mark with this video. An LLC is a legal entity. And very often, depending on what type of tax entity you have for your LLC, you are required to pay yourself on a W-2. Second, even if we assume he's talking about a sole proprietorship from a tax perspective for the LLC, it doesn't typically matter to the IRS because you take the deduction and then you recognize the income and the IRS is not worse off. So while he's telling you that this is illegal, let's see what he's actually recommending as a legal tax strategy.
As a wealthy person, you can set up a private family foundation, and the money that you contribute to this foundation is tax deductible to you. You can contribute art to the foundation and you can get a tax deduction that's way more than what you pay for the art. So for example, I can buy art for like $10,000, have someone else appraise it for $100,000 and donate that art to my private family foundation. And I get the write-off at the amount of the fair market value of the art. So I only paid $10,000 for it, but I will get a $100,000 tax deduction for donating it to my own charity. And guess what? I can still hang the art up in my house.
This is tax fraud, and the IRS knows about it, which is why they have an entire division devoted to art and appraisals. And then even if legitimately it was worth more money when you donated it, you cannot then turn around and keep private benefit from it in your own home. And for actual tax law from a tax attorney, subscribe.